Hey, it's Tyrone Jackson, the Wealthy Investor, coming at you with another easy to follow tutorial on how the stock market works. The question I get asked all the time is, how do I get started investing? How do I get started investing? Well, today I'm going to show you some things that you can do to start start entering the world of investing and having success. One of the first things I'm going to ask you to do is subscribe to my channel here on YouTube, or head on over to thewealthyinvestor.net. That's thewealthyinvestor.net, and sign up for my absolutely free newsletter. That way, when something happens in the stock market, I'll alert you. We'll have discussions on hot stocks and what stocks are trending higher, what stocks, most importantly, to stay away from. But today, I want to introduce you or recapitulate the concept, the idea that all wealth is taught. All wealth is taught. If you did not grow up in a family where you got a financial education, that's why the Wealthy Investor Program exists, so that I can guide you to the market and get the financial education you did not get in high school or college or in grad school. So let's talk about how we can make money work for you right now in today's stock market. First of all, if you want to start investing, what we do in the Wealthy Investor Program is we start off with established names. We take a small amount of money, $500, $1,500, $2,500, and we just sort of kind of get the feel of the stock market. Now, if you've been following me on social media or any of my talk show appearances, I apologize, but you know how I feel about Disney stock. Disney's ticker symbol is DIS. It's a member of the Dow Jones Industrial Average, and when we start off investing, we want low risk stocks. Low risk stocks. So I have another saying in the Wealthy Investor Program, which is we don't marry stocks, we only date them. So we're not there to fall in love with the stock, but we're there to watch its trend and how much money the company's actually making. So this is a 5-year chart, a 5-year picture of Disney. Now, I've been in this stock for quite a while, so I know what we call the story of the stock. In other words, how the company actually makes money. But now we're going to look at the stock price, and you'll notice that it has a tendency to rise. We refer to that rising as an upward trend. Disney is in an upward trend. This is a 5-year chart, so 5 years ago, Disney had a great story, but if I had purchased some shares here at $30, $3,000 worth of stock, a $3,000 investment in an established company, today, 5 years later, without me doing anything, just being a shareholder, my $3,000 investment is worth over $9,300. Now, how did my money grow over 5 years? Because I started investing in a low risk name. You want to make a lot of money? Lower your risk in the stock market. Don't start off with higher risk names. Let's take a look at another member of the Dow Jones Industrial Average, which I absolutely love, which is a company called Home Depot, ticker symbol HD. At Home Depot, the revenues are growing, and so that reflects itself in the stock price. What kind of revenues make a stock price grow? It's called top line revenue. And when top line revenue is there and growing, you get a 5-year picture that looks like this. So had I gotten Home Depot around $25 a share 5 years ago, the stock is at 106 and I just held it, my $2,500 investment is now worth over $10,000. That's how you make your money grow initially in low risk stocks like Home Depot. What stocks do you want to stay away from? At the beginning of your investing career, you want to stay away from stocks that are not a member of the Dow Jones Industrial Average, those top 30 stocks that have proven themselves. So if I was starting out, even though it's at $16 per share, I would never want to own Pandora. Now, I like Pandora in my car, don't get me wrong, but I do not like it for my money. It is not the kind of date that I would go on, and therefore my students don't go on when you're learning how to invest. Look at this picture. Since it's been public less than 5 years, it's a pretty rocky ride, isn't it? Right? We can learn a lot just from looking at 5-year charts and trends of stock. This is not like the others. I teach very often from the Sesame Street approach, and I say one of these pictures is not like the other. This is Disney, Home Depot, and Pandora. Where would you like to place your money just based on trend, just based on pictures? All wealth is taught. If no one teaches you how to put money to work in the stock market, then you are locked out of the game that creates millionaires and billionaires every single year. Now, if you know me, you know how much I love TD Ameritrade. You just simply go to tdameritrade.com. You can open an account here for as little as $600. So it's not that you need hundreds of thousands of dollars to get started in the stock market. You can get started with $600, $1,500, $2,500, 25 or $5,000 or even $25,000, but just obey these principles of staying with low risk stocks like Disney, Home Depot, and Pandora. Now, if you staying away from Pandora, I'm sorry. So, if you really want information and to get in the game and to learn how to keep your investing simple, then head on over again to thewealthyinvestor.net, and you and I can work the stock market together as you educate yourself financially so that your money can exponentially grow and you can create wealth.